Welcome back to the kangaroo court, the circus here, better known as the Real Estate 401k Show. I'm your host, Mike Weinstein, alongside Justin Frederick and Ryan Gerdes. The three of us, we're well, you're going to want to text the word bank to 623 AZ RECON. That's bank to 623 AZ RECON, because I can assure some of you listening to this, you're going to want to text in, because this loan program that we're going to get into is it's very unique, and it's going to fit your needs perfectly. But, three of us, we talk throughout the week, and we're almost every day, because we're working with mutual clients and so forth. And so we get to hear stories, and we get to hear examples of what each other are working on. And Justin, you were talking about earlier before we jump behind the microphones about a woman that you're working with, that so many business owners are in her situation. The solution was a bank statement loan. So let's get into the situation and how this unique lending product helped her. Because again, I can't tell you how many people we talk with, people who text in from the podcast, they're in the same situation, and they want to buy real estate.
Yeah, so this woman came to me. She has 2 S corporations, and she also operates as a Schedule C for some of her 1099 income. And on paper, at the end of the day, she only showed $5,900 and some change in income per month. But looking through the S corps, the revenues were extremely high coming in. Talking, $800,000 a year in revenue on one of the S corps, and the other one was showing just shy of 700. And so she knew that she wasn't qualifying for a loan, but we had a lot of new, we call them non-QM, which stands for non-quality mortgage, which is just outside of your conventional financing,
which you're not getting at Wells Fargo.
Right. You're 100%. You're not getting this. So started going through those, because we've really been making a push this year at them and coming up with some new products that we're delegated, meaning that we underwrite them. So I'm not having to broker it out. And that's the big thing for me, is I don't want to put the control into somebody else's hands. Get 24 months bank statements from her. You could do 12 or 24, but the pricing's better if you do 24. And basically they're taking the average of deposits and the average of the deductions, and they're coming up with an average income. Now they're not deducting all the expenses. But this woman went from $59 and change per month to $50,324 per month in usable income on this bank statement loan. And she went from not qualifying for a loan to basically
qualifying for whatever she wants.
She barely has any debt. Interest rate was only 0.5% higher to utilize this. There's no extra points that come along with it. Like in the past when we were brokering it, now that we're delegated, there's not all these extra fees that are coming along with it to pay the other bank to do the investment. So we're talking 2% less on cost and a decent interest rate. Whereas before, when I was using these types of products through broker avenues, I was looking at rates closer to 9%, maybe even 10%, depending on what credit scores were. And we're talking about a solid 30-year fixed interest rate to get her into a house. And so she could have waited a year, and I could have given her some information to help her wait a year. But she was like, I'm ready to go now. This is good. I can refinance later on if I really want to. No prepayment penalties. Now, the beauty of this product too is now the interest rate's not going to be exactly the same, but you could do a minimum of 10% down. So we're not asking for 20% like we were in the past. Also, minimum FICO scores on this is as low as 620.
Jeez.
Now, at a 620 credit score, you're most likely going to need to put down at least 20% in order to get into it.
And have a higher interest rate.
Correct. But a lot of these types of programs, too, require investment experience. This program doesn't require it. So very nice there. You could be a first-time home buyer and buy with a bank statement program. And here's the thing. if you're taking a 0.5% higher on interest rate, but you're not paying taxes,
That's what I was about to say. Yeah.
who cares that your rate's a 0.5%
Yeah.
higher? I guarantee you're saving a lot more money on a 0.5% higher than paying taxes on all that money that.
Well, at the end of the day, I don't like to give anyone money, but I'd rather give money to my bank than to the IRS.
Sure. And I mean, if she would have claimed probably the income that she actually had, I mean, I'm not saying that she didn't because I'm not a tax professional, but I guarantee she would have been writing a massive check for that. And year over year, way outweighs the higher interest rate.
So what does it look like for non-owner occupied investment loans?
You can absolutely do that. Rates going to be higher. It's probably going to be some, and I'm just shooting from the hip. It's probably going to be mid-8s or higher on that product. But it's an incredible product.
Talk to everyone about a little bit about how people make their money, because some of the people out there that are just W-2 employees, and I'm bringing this up because recently it seems like I talked to a lot of people that have been in a W-2 job for forever. They want to do better, they want to make more money, and they know that being an entrepreneur is going to probably be their path. Talk a little bit about what that transition looks like. So you mentioned an S corp. What are some other type of entities, and how do you guys look at that income, and what can they do?
There's partnerships, S corps. You got Schedule C income. You got Schedule E income from rental properties if you're going to manage rental properties. But the way we look at that type of income is you have to show consistency. So a standard individual moving from a W-2 to an entrepreneur, the underwriters are going to want to see 2 years of filed tax returns and being in business for a minimum of 2 years. Now, there's some ways around it. If you were a W-2 employee and you moved out into a self-employment role, and your net income on your business was higher than your gross income on your W-2 income, then we could do 1 year tax return. But it would have to be a full year filed of self-employment. So that works out a lot of times with, we see that mostly with truck drivers.
So moral of the story, if you're going to start up a business, do it at the end of the year.
Buy a house first. Yes, do it at the very end of the year too.
And then start planning for your investment properties, right?
Yeah. Buy a house before you do that. Now, with these types of bank statement programs, if you're an entrepreneur for 1 year, we'll get 1 year business. So make sure you have your business bank statements. Don't use a personal account when you're doing this. But if you have 1 year business bank statements, we can use those business bank statements to qualify you for a loan. So much sooner. Even if you switched lines of work and you started your own business and you're doing well, great. We'll use those 12 months bank statements and we'll be able to get you in a house.
Well, if you are a business owner, and we're coming up on tax season, because this is a very aggressive and a very, I want to say a very creative solution, but it's not like it just doesn't exist out there for a lot of loan officers. There's just very few loan officers that understand it and know it's there and understand how it works and who it benefits. But if you fall into that category, we want to introduce you to Justin and his team. All you got to do is text the word bank to 623-AZ-RECON. That's bank to 623-AZ-RECON. So let's talk about taxes are coming up and talk about strategies. Because to me, for a business owner, this is a game changer, because it is. It's when we work with so many independent contractors, it's that balance of how much income do I have to show? What's the bare minimum of income that I have to show in order to qualify? Because I want to write off as much as I can. And so we have so many business owners right now who are thinking about possibly doing something in real estate, for 2025. I would say text bank to 623-AZ-RECON before you make that decision to pay a bunch of taxes so you can qualify for a mortgage, at least start the conversation and start building the strategy now.
And I agree with you. And I think the biggest thing now that we have these tools in our bag, these solid tools in our bag, now we can actually compare, okay, if you claim this income, you're going to write this check to the IRS. Is that worth going after the income on your tax return, or is it worth just taking the bank statement loan? Because here's the difference in interest if you take this bank statement loan rather than if you were to claim this income. So now that we have these tools in our bag, it's like it's not you have to do this. There's other possibilities out there, and I love the fact that we have the ability to do all these. And there's certain people that fit these profiles perfectly.
And what I love is how excited you are about it. Like a lot of lenders, they would get something like this and going, "Oh, it's complicated. I don't want to do the work." They're like, "Oh, like you freaking get excited about the creativity of this stuff and finding solutions to problems."
Yeah. Well, actually, I was on a national sales call for Fairway last week, and I got to explain why I'm using these products to everybody because they're excited about how many I'm getting in the door. But it's easy. It's easy, and it's easier for people. And it is exciting because these rates are comparable. We're not talking a 1.5% higher with 2% more in cost. These are solid, game-changing products that can really make the business go round and round a little bit more.
So they are basing it off of Prime Plus, right?
No, it's not based on Prime. It is these are private investors that are settling for certain rates with us.
Okay.
So these are this is Fairway products. I mean, we've gathered up these investors and made deals with them and created guidelines.
So conceivably, we could hit a threshold with if interest rates went up, then they could stay the same, or how are they? How are they normally
they
doing
still
it?
adjust, but they're not adjusting as much as we would see the other products. So I can't really speak on that because really all this has really gone down in the past 40 days.
Okay.
You know,
That is cool.
change of office has really had an impact on what's happening here. But it is cool. I'm super excited to see where this leads us as a company and in lending, because I feel like these products have been underutilized because of cost, and I can see why a customer would walk away from the additional fees too, because at the end of the day, you know, not only was the upfront cost expensive, but your overall cost with interest per month was just much higher than it needed to be.
Well, and you can't. You always got to look at the full picture, Justin. You just can't look at costs and higher interest rate. You're also talking about the savings on taxes, and what you don't. I mean, and so there's so many numbers that go into it. If you are a business owner and especially thinking about doing something in real estate in the next 24 months, before you go down to a big box bank or before you talk to a lender that doesn't have the creativity and understand these programs, we want to just do yourself a favor. Text the word bank to 623 AZ RECON. That's bank to 623 AZ RECON, and learn what all of your options are.